welcome out to today's advisory report. It is July 29, 2026, a crazy volatile day today in the market. Looking at our gauges, you can see the market condition is adverse. The intermediate trend remains bullish. The short-term trend is definitely bearish. Looking at today's returns, you can see some of the defense that we have been playing has panned out in our favor. The S&P 500 down 1.54%. The Q's down 2%. You can see all of our strategies outperforming, even though we lost a little bit today. At least we didn't lose what the market lost. And we are at the beginning stages of defense, so we're not fully defensive. We're just pumping the brakes to see what happens. Let's go ahead and jump on over to the intermediate trend. We are looking at the S&P 500 on a weekly chart here. It is price versus the 30-week. As you can see, we've moved sideways, dipped down, confirmed a bit down. It'll be interesting to see what happens if the market decides to close this gap further. Interest rate announcement today caused a lot of volatility. The market sold off, I think, close to about 1% before the rate announcement, which was a hold. And then while the Fed chair spoke, the market was ripping back up, took away all those losses, was actually green. And then the second the meeting ended, the market sold back out, down and sold down lower than even where it was before. Let's go ahead and open up the charts. And we are right now looking at the short-term chart. And here we can see that nasty candle closing at the lows of the day, but closing at a spot where you would expect price to stop, which was this low right here. Let's go ahead and put a quick line in there if we can. Probably have to move that up a little bit to right there. Okay, there's another line in the sand for us, but we are definitely defensive, moving defensive. Can't stop all the pullback from happening in an account, but we can try to pump the brakes and protect as much capital as possible. Let's jump on over to the intraday chart. Here's that 5-minute chart right down here at the bottom. I'll make it a little bigger. I'll circle where we're looking at. As I mentioned, price sold off. We were down about 1%. The rate came out at noon and markets started going up. And then we had Wash speak and markets really started going up. The second he stopped speaking, markets sold all the way back down. This is a pretty common situation as far as the volatility on Fed interest rate announcement. I think the market is still trying to figure out what's Wash's true angle. He sounded pretty hawkish last time he spoke. I thought maybe we might even have a surprise rate hike. We didn't get that today. It was 9-3, I believe, was the statistics as far as 9 Fed members voted to keep rates where they are. 3 voted to hike. We'll see if that gets pushed around a little bit. Let's jump over to Market Lens really quick. Let's look at a few things. First, this is the reason why you have stop losses. We took a position in STX as it started turning up. The setup was decent. We look for stocks that have moved, pulled back, and now are turning back up. We purchased around this area, and we were back out of it around this area. You can see kind of what happened there. Let's go ahead and look at AMD. Same type of situation. We got in on the turn back up, and we got out as we broke the 50-day, and you can see kind of what happened. A huge drop off below the 50-day. Let's see if we can get our little price tool working. From the 50-day down to the lows today, another 15%. Goldman Sachs, very, very similar. Let's go ahead and open that one up. This was one that we were accumulating in this area. Price ended up ripping 7 to 10%. Then we had the market start rolling over, a little bit of a sell-off. tried to gain its composure, eventually sold back off. We blew this one out yesterday, and look what happened today, down 5%. This is why you have stops. You just don't buy and hope forever. Let's go ahead and look at a couple of positions that we still have in the ultra aggressive account. We have our crowd strike position. We accumulated that in this area right here. We actually took some profits along the way. It pulled back. Now it looks like it might be gaining support. We're kind of at the edge on this one also. We'll see if it wants to turn back up. And Eli Lilly, we ended up accumulating that in this area right here. A nice gain. Took some profits. It came back, righted itself, and now it's turned back up. Looking actually for a cup and handle right here. We'll see if we get a couple more days pullback and a turn back up. We'll have to see how that works. We did hedge a little bit of our S&P 500 position today. This is the triple leveraged S&P. As you can imagine, with the S&P dropping the way it did, this one rocked it up. We are in the green on that one. Not really trying to make money with this position as much as we are just trying to neutralize the opposite bullish position that we have in this strategy. That's what I got for you today. Take care. Have a wonderful afternoon. We'll be right back at it tomorrow.